Using spread bets for dividends and end-of-year tax planning. Once someone asked me to show him practical but intelligent ways of using spread betting to invest or trade. Where shall I start? Now, apart from using spread betting to save taxes, short shares, and profit from down movements in a bear market and utilizing leverage to boost gains, you can also use spread betting for hedging purposes or to open a pairs trade and profit from the relative performance of one company in relation to another in the same sector. Other possible ways. End-of-year tax planning. For tax planning purposes, I sometimes want to sell a share to realize a profit or loss before the end-of-year tax, but I don't want to give up any of my interest in the growth prospects of the company. I would therefore sell the share, realizing the gain or loss in the process, and then buy it back through a spread bet. Now, after 30 days, I can close the spread bet and repurchase the share. That is, in the case that you would be using spread betting as a substitute for holding the shares. Dividends. If you hold long a position in a share, most financial spread betting firms will credit your account with 90% of the value of the dividend you would have received in the instance you had been holding the physical shares. Some traders and investors actually take advantage of this, and they use spread bets for this reason. They may have used their GCT allowances for the year already, picking dividends from stocks they hold in their physical portfolio, where they hold the actual stocks. Financial spread betting allows them to get the benefit of dividends outside this allowance, since spread betting is tax-free in the UK. Do keep in mind that you are still only getting 90% of the dividend, not the full value, but at least it does not count towards your capital gains tax allowance. Some traders simply use spread betting as a speculative tool. Traders commonly use spread betting to profit from range-bound markets, buying near the bottom of the range and selling near the top of the range. Using this strategy, you might opt to place your stop loss just below the bottom of the range or just below the top, depending on whether you are going long or short. If you are willing to risk 10 points in order to make 20 points, you should set the levels of the stop losses accordingly. For more information, visit www.financial-spread-betting.com.